interest on loans and advances. Now the question comes, partner says I want 36% interest per annum, I want 48% interest per annum. Is the firm obliged to pay interest on loans and advances at such a high rate? The answer is, interest on loans and advances have to be paid to the partner as per the rate specified by the partnership deed. The partnership deed says 9%, the firm has to pay 9% to the partner. If the partnership deed says 12%, the firm has to pay 12% on the loans provided by the partners. If the partnership deed is silent, in such a situation, this point is very important. The Partnership Act provides for 6% per annum as the interest rate. So when the partnership deed is silent, if the partners have provided any loans and advances, the firm has to pay 6% per annum as interest to the partner. Okay, so this point becomes very clear to you. And now, interest on loans and advance is an expense for the firm. The question comes, is it an appropriation, that is sharing of profits, or is it a charge against profits? The answer is, interest on loans and advances is not an appropriation of profits, it is a charge against profits. Now what do you mean by charge against profits? That means whether there are profits or not, whether the firm is making profits or not, whether there are available profits or not, the firm has to pay full amount of interest to the partners. The firm cannot escape payment of interest just because there are no profits or just because there are insufficient profits. So whether there are profits or not, we have to pay interest on loans and advances which have been granted by the partner. That is why we call interest on loans and advances as a charge against profits. It's not an appropriation of profits. Interest on loans and advances is an above the line item. It is not a below the line item. Interest on loans and advances provided by the partner has to be shown in the profit and loss account. It should not be shown in the profit and loss appropriation account. So what are the two entries we are going to pass? We are going to pass two entries. The first entry is, interest on loans is an expense for the firm. Interest on loan account data to partners capital or current account credit. When the interest is made due, we are going to pass this entry. Second entry, interest on loan should be debited to the P&L account. So we pass the entry, P&L account data to interest on loans account credit. So we are going to pass these two entries, interest on loans account data to partners capital account, and interest is made due, P&L account data to interest on loans account, and the interest is transferred to the profit and loss account. I'll repeat the topic once again. Partners are entitled to claim interest on loans and advances as per the rate specified in the partnership deed. If the partnership deed is silent, partners can claim, according to the Partnership Act 1932, they can claim 6% interest on their loans and advance. Interest on loans and advance is a charge against profits. It is not an appropriation of profits. That means whether there are profits or not, they have to pay interest on loans and advances. Let us come to the last topic which we are going to discuss. Sharing of profits. At the end of the year, after making all adjustments, that is interest on drawings, interest on capital, salaries, commission, interest on loans and advances, after making all adjustments, profits are available. How they have to be shared? Or there are losses. How the losses should be shared? This is the question that comes. How to share profits and losses among the partners? The answer is, if the partnership deed provides for the ratio, the profits or the losses have to be shared according to the ratio given in the partnership deed. If the partnership deed is silent, the Partnership Act provides that partners have to share the profits in an equal manner. In what manner? In an equal manner. That means the ratio will be equal among the partners. So it's very, very simple. If the partnership deed provides the profit sharing ratio, share the profits as per the profit sharing ratio given in the partnership deed. If it is silent, then you have to share the profits equally. Now, when you share the profits, what is the entry we pass? We are going to pass an entry like this. P&L appropriation account data to partners' capital or current account credit. So the available profits will be shared to the partners either equally or as per the agreed ratio. So we are going to debit the profit and loss appropriation account with the available profits, and the partner's capital account will be credited, or the partner's current account will be credited, sharing the profits either equally or in the agreed ratio as given by the partnership deal. Okay, so this is the entire discussion on the fundamentals of partnership accounting. Thank you.